How is it, Baroon? Today, welcome back to the channel. So in this video, I'm going to be talking about SBE stock, which will be merging, basically becoming into Chargepoint stock. Now, this is a merger. It's a SPAC, which is called. The ticker symbol and everything is going to change once the merger actually happens. But I'm making this video today to actually let you guys know that I basically made a video talking about this stock exactly on November 9th. So just about 15 days ago now, 15 days ago, talking about how this is literally a 2x stock in my opinion. And as you can see, it has literally doubled since I made that video. Like, I'm not even joking. I sold off yesterday at 30 something dollars, $33, I think, something like that. But I did not build my position that big because I usually don't like buying companies before a merger. I'm not really a speculative investor like that. I'm gonna buy a stock because it's good, not because I think it's gonna blow up once it merges, right? So I just had to sell out, man. I couldn't hold it at that valuation. But this is the video that I'm talking about. If you guys watched actually watched my video, it only got 200 views. So I mean, at least one person had to have bought this stock because of my video, right? And actually invested. So I literally talked about Chargepoint stock. It was my 3 stocks to buy now video with 2x growth for November 2020. I made this in the beginning of November 2020. My first stock out of those 3 was literally Chargepoint stock at $17. So if you guys bought this stock by watching my video, it literally doubled. So I mean, I don't know if any of you guys are watching this that actually bought it, then congrats. But yeah, I'm going to be talking more about this stock. Is it still a buy? Should you sell it? Stuff like that. Now, make sure you guys subscribe to this channel if you haven't already. If you guys, once again, if you literally watched my channel, you would have hopefully looked into this stock and maybe bought it yourself and profited. So I'm gonna strive to make more videos like these. So if you guys can subscribe, help me reach 600 subscribers by the end of 2020. That's gonna be my goal. I'm gonna hit 1,000 subscribers in 2021 for sure. That's gonna be my goal. So if you guys can help me, that would mean a lot. Now, right before we jump into it, if you haven't already, make sure to sign up for Webull down in the description. Literally make a brokerage and you get 4 free stocks. All you have to do is deposit $100 and you can get 2 free stocks worth up to $1,600 out of the 4. So definitely make sure to sign up with the link down below. Just make sure you guys are living in the United States. That's the only requirement. Now, this stock has gone down today. Actually, it's down 5%, but that's not 5%. What is that to a 100% grower, right? So in the last month, it has done insane. So when I got into this stock, right, at $17, I didn't buy a lot of it. I usually, I made a starter position, which is what I usually do. I buy a few shares to actually just start up a starter position, right? So, and what I do is I slowly build onto it. I don't usually go all in at a stock all at once because you never know what will happen. And at that point, the stock had already gone up from $10 to $17. So the way SPACs works are they're always $10, right? The stock is always $10, and the reason that is because when it merges, it's going to acquire the new cost of the merger. So you're not exactly getting a deal if you buy it at $36. So usually once the merger gets actually confirmed, the stock goes from $10, and it might trade a little bit higher because now this is not just a merger stock at $10. This is now a stock that's merging with a good company. So it's natural that the stock goes up to maybe 13, 14. In this case, it went up all the way to $15, and it stayed at $15 for quite a bit. And I don't know if people are just hyped on this. I think the hype just went crazy and it basically caused the stock to just explode. Now, what people don't realize is that this is a merger SPAC type of stock. So you're basically paying 3 times what the valuation is going to be worth at the time of the merger, and almost 4 times if you buy it at $34 to $40. And I mean, I guess that's fine if you think the stock is going to completely 2x, 5x, 10x in the next few years. I mean, go all for it. But I personally sold my starter position, whatever I had, just yesterday, I think at 32. So I could have held it a little more, but I guess it's all good. I'm not sweating it at all. But obviously, that is that. So what is Chargepoint? I talked about this last time, my last video that I made on this, and basically the way I found out about the stock wasn't through YouTube and all the hype. There's locations all over, even across the street of where I live, of Chargepoint chargers. So literally across the street, I drive to school or work every day, right? Whenever I used to, at least. And you drive by and you always see these chargers that they're always pretty full. Like there's always a car by those chargers charging, like almost all the time. There's 2 slots per charger across my street, and one of them at least is always full. Whenever I see there's either like a Tesla or a plug-in like Prius or something, there's always a car there. And I'm like, this is pretty interesting. And when I saw they were merging, I just had to pick up a little bit of like a little small position of shares. And after the merger, I'm definitely looking into this stock to buy. But right now, before the merger at 35, I just can't justify purchasing it at this price. At this point, it's pure just people getting into it either to make a quick buck after the merger, one, or number two, it's people that are just holding this very long term, which I kind of respect, but I don't really see myself holding this long term at this price, at least. If it goes back down to 17, we'll just have to see what the price is after the merger and then go on from there. If you're watching this video, I would not recommend buying it at $34 at all, because it's just you're paying way too much for this company. And I feel like as people, these type of stocks are just all hype. These kind of merger companies. There's like 3 different EV charging merger companies. Out of the 3 EV charging merger companies, this is the best one by far. I think ChargePoint has the most locations in the whole US. It's a great company. Like, it's a legitimate great company. But if you look at their revenues, they've been losing money for like many years, and obviously since they're losing money, and they have a pretty good business model and stuff, so that's good, but I don't really see how they could like completely in the short term with this price actually justify paying $37. Basically they're worth 2.4 billion, and they've already added almost like 3 billion to it, right? So once it combines, it's not gonna be a fair valuation, not even close. Like, it's almost like valuing Tesla at that price. It's like the potential for this company is nowhere near the potential that Tesla has, in my opinion, in terms of growth. So the one thing is they have a lot of competition, right? Like, anyone can come in with this. Like, let's say Tesla completely has their charging places everywhere, then these kind of chargers are going to be obsolete. Let's say people actually have these chargers at homes more, that's going to be kind of obsolete. So there's some bad things about this company, but overall, if you want to buy a charger company, a car charging like EV type of company, this is the way to go. Just because, if you don't know, the government basically pays for so many of these. Let's say you're a business, you're a Subway, right? You want to put a charger in front of your home to maybe attract more business. Boom, all you have to do, talk to the government. They have not loans, but they have grants. Literally, it's like almost free. You can build a charger. They literally give you a grant. After you build it, let's say you pay $2,000 up front, build that, check comes in the mail, the government literally mails you like a $2,000 check. It's different from city to city, but at least in California, that's how it is. And that's the reason why these companies do so good right now, in my opinion, is that it's literally free for them to build these chargers, because this company profits so much from the government just giving these grants and stuff like that. But recently, they've been building like more of these big type of chargers, which kind of like a gas station type like structures, which are definitely more expensive. I don't know how much those cost, but that is that. Obviously, like I said, they have been losing money, but that can obviously change pretty quickly. And the way it works is after they build it, right? Let's say, okay, you've spent money, they've made the money for building they basically sell their chargers. Then all you have to do, every time someone charges, you have to pay like a 10-cent fee or a 20-cent fee for using it. That goes straight to Chargepoint. So that's like a pretty good business model. You sell something once and you get recurring revenue forever as long as people use it. And especially if you're like a business that always has employees, most likely you're going to get recurring revenue pretty often, that's for sure. And sometimes like the business may pay for your charging. So, I mean, it's all varies there. But yeah, that is pretty much it. There's not much else I could talk about. Once the merger happens, I'll definitely make another video on this if I need to. But that is that. I'm out of this stock now. I'm not really looking to buy this at all at this big of a valuation, man. It's not worth it. The competition is there, in my opinion. they have a lead on the competition in terms of locations by far. They have so many locations of these kind of chargers. So that is that. Hopefully you guys enjoyed. Thank you guys for watching, and I'll see you on the next video.